Hi, this is Stephen Meade, lifelong entrepreneur, business owner, and global speaker. Over the years, I've read hundreds of books and spent thousands of hours developing what I call the Bullseye Belief System. And I've used that system to develop my own companies, as well as help others learn to be specific, targeted, and focused to get exactly what they want in life. Again, I'm Stephen Meade, and this is the Bullseye Guy Podcast. Stephen Meade again. We're going to jump into some stuff on the Bullseye Podcast today, and we're going to focus on a little bit of crypto. I know it's a big, exciting time going on right now. There's a lot of interest. There's a lot of confusion as well. And I call the industry blockchain a whole lot of B's. And what I mean by that is blockchain, of course, starts with a B, but blockchain is a whole lot of Baffle, a whole lot of Babble, and a whole lot of BS. We'll let you fill in the blanks. If you get past those three B's, there's some brilliant stuff there. But you have to get through the fluff. And we're going to cut through a little bit of the fluff today. We're going to go through some volume and the reason that Bitcoin's going up or down. There's a lot of concern about volatility and cryptocurrency. We're going to cover that a little bit. We're going to go a little bit into some of the credit card world. And we'll probably end up with a little bit of something timely and relevant around Facebook and Libra, the Libra coin. All right. But any of you that have been following, if you're the least bit interested, Bitcoin to me, and this is me just personally, this is my explanation. Bitcoin to me is sort of like a brick of gold. So if we think about it for a minute, a brick of gold, and I challenge people all the time, how much does a brick of gold cost? And if you don't know the answer, it's okay. I didn't know either. I actually had to go look it up. But a single brick of gold is $515,000. Here's what I know about gold and what I don't know. What I do know about a brick of gold: one, I'm not going to go buy a brick anytime soon. Two, I probably can't walk around with it in my pocket. Not very portable, not very transportable, can't easily be spent. But I also know gold goes up and down, it's traded. But I also know gold doesn't really do anything, doesn't have employees, doesn't have revenue, doesn't make anything. It's gold. But if I can't afford a brick, I can go buy a gold coin. So think about it for a moment. A gold coin might cost me $50. That gold coin goes up and down by the same percentage as a gold brick. Now think about that for a moment. To me, that's fascinating. Right? If you've never been given access to the world of financial instruments, 98% of the world's population can't go into the financial world. You can't go online and buy one share of Amazon. Last I checked, a share of Amazon's $1,800. Not everybody has $1,800. Most brokers aren't going to sell you one share. And you can't buy fractions. Gold, you can buy fractions. Bitcoin's the same way. A unit of Bitcoin, as we sit here and speak, is trading at about $11,000. That's great. But if you can't afford $11,000, not to worry, you can buy $50 worth. You can buy $100. You can buy 5 cents worth. You can buy fractions. But that $50 investment, if we were to look at it as an investment, a stored value, a unit, it goes up and down the same percentage as the guy who can buy a whole Bitcoin at $11,000. So simply to me, Bitcoin may be a lot of things as it matures, but initially it's a store value. But it gets a little more interesting. What makes gold go up and down is supply and demand and interest. Again, gold doesn't produce anything. You don't wait for the quarterly report to come out on gold and look at the projected revenue. So what drives gold is fascinating. It's supply and demand, speculation, and interest. And we've been conditioned to think gold is finite. Right? It's hard to get out of the ground. It's hard to develop. Bitcoin has some of those same properties, meaning Bitcoin is mined. I'm not going to go into it. I don't know how Bitcoin is mined, honestly, any more than I know how gold's mined. But what I do know that gets there is there's a finite number of these Bitcoin units that will ever be created. So we'll go into that, but Bitcoin's prices have these wild swings. And that's where people get a little nervous. But if you take the next premise, Bitcoin a lot is like a stock, right? It's more like a penny stock than a big stock. And in the US, we have this thing called OTC, over the counter. And you've got a stock and you can move that thing up or down with not a lot of volume, meaning somebody that buys $1,000 or $5,000 or $10,000 or $50,000, that price may move quite a bit because there's not a lot of volume around it. But as you get more and more volume, as you get more buyers and sellers, that valuation and fluctuation starts to flatten out. So let's look at Bitcoin for a minute. There was an interesting run up last year, 2017 going into 18. Bitcoin went all the way up to $20,000. Was it worth it? Probably not. Maybe one day. But prior to that, in 2017, I want to talk about simple stock. This is what we call supply and demand. There was a whole lot of interest in 2018. We'll call that demand. There was a lot of people trying to buy it because it kept running up. If you're ever in a situation where your taxi driver or your waiter at the restaurant is talking to you about a stock or Bitcoin, you know it's gone mainstream and it's probably overvalued. I had more taxi drivers talking to me about Bitcoin than I know what to do with. I thought, oh man, this is going to be a bubble. But again, it's a fluctuation bubble. It's not a crash. To me, that's a difference. So the amount of volume in 2018 was pretty high. There was a lot of volume. Prior to 2018, there weren't a whole lot of sellers. There wasn't a lot of supply in the Bitcoin world because not a lot of people held it. People didn't really know what it was. So a lot of my friends that were in it were freaked out when it hit 1,000 and then 2 and 5 and 10, and it went to 20,000 before anybody knew what was going on. There weren't a lot of sellers. So you had a lot of buying volume, but limited selling. 2018, there was this thing created called an ICO, an internet coin offering, almost like a public offering in the United States. Think of it like an IPO, an initial public offering where a big company like Uber goes public and sells lots of stock, and they're trying to raise the price and raise money. That's what an ICO was. In the world of crypto and crypto finance, ICOs raise hundreds of millions of dollars. So all through 2018, the volume stayed the same or higher. But all of a sudden, there was a lot of liquidity for people selling. These companies that had raised money taking in Bitcoin now had to sell and liquidate it and convert it to cash to make their payments. So we had a depression. It was called a crypto summer. The market was way down. All of a sudden, towards the end of 2018, going into 2019, here we are in June 2019, a lot of that selling liquidity is gone. Those ICOs have liquidated down, but the buying volume has remained the same. So simple economics, Bitcoin by default is going to, in my opinion, continue to go up. You have hedge funds, venture capital, you have family offices. These companies have to start putting a percentage of their holdings into diversified assets, diversified holdings, diversified investments. Bitcoin, the way the finance institution looking at it, is becoming an investment. And so as percentages start moving over, and percentages for you and I are small. Percentages for hedge funds and family offices and pensions are billions and hundreds of billions of dollars. So that buying volume is going to remain. The selling volume and the liquidity is a little compressed. Bitcoin by default is going to go up. And so when I talk about it, I tell people, hey, don't worry about the price. Bitcoin's 11,000 now. Look at the percentage. The percentage increase for this year versus any of your other investment opportunities. Banks are paying negative interest. Some banks in other countries, you have to pay them for the privilege of keeping your money there. Stocks, bonds, when you start looking at things at percentage, this crypto asset of Bitcoin has been one of the best performing assets on a return of anything on the planet. Does it fluctuate? Yeah. Is it risky? Sure. I'm not saying put all your money there, but as a percentage of allocation, Bitcoin's a fascinating stored value. That's the way I view it. And what that moves us into is this world of what's called cryptocurrency. And Bitcoin to me is not a currency. It somewhat acts as a payment vehicle, but most of the things that the industry are calling cryptocurrencies, to me, are crypto tokens or coins. They're really tradable assets. Again, they're like stocks on an OTC bulletin board. They're penny stocks. Ripple was great. Any of you that are tracking this industry, Ripple, XRP, one of the darlings. Ripple, I don't pay attention anymore. It's probably trading at 40 cents. I bought Ripple at 18, and I think we sold it at close to $3. That was a win. We bought another one I love. Again, none of this is stock advice. I'm not a financial advisor. Just this is what we personally did that was fascinating. Bought into EOS. I love the EOS team. I think they're great. We bought in at 9, thought it would go to 45. It dropped to 3. Call that a loss. Well, it's only a loss if you sell, right? So this is where you have to decide when you're investing, whether this is crypto or whether it's traditional stock. Any of you that have been around long enough through the 90s, we had the internet bubble. Amazon's great. Amazon crashed, I think, all the way down to $9. A lot of people didn't think Amazon was going to make it. It crashed and it recovered. There's other ones. Apple, if you look at Apple, Apple's gone way up and way down. But then there's also ones like pet.com and toys.com, some of those early ones that Bill Gross and the team at Idealab created that they were just too early. So all investments are risky. Some of them are going to go up and down. Most of the things called cryptocurrency to me are crypto coins. They're tradable assets, just like tradable stock. All right, so let's look at Bitcoin, though, as a type of processor, meaning could it be a currency? It could. If you owned a restaurant and you wanted to take Bitcoin for your $4 cup of coffee, not a big deal. You could take it. But if it fluctuates and you wake up tomorrow and Bitcoin's gone up 8% or down 15 on $4, not a big deal. If that's 40,000 or 4 million or 40 million, you can't take fluctuation on something like Bitcoin. But my point is, I joke all the time, restaurants, businesses, anybody could start taking crypto tomorrow if they wanted to. But the reality is they'll never accept crypto. And what I mean by that is not that crypto's bad, not that Bitcoin's bad. The restaurant, let's use restaurants as an example. Actually, let's use Rolex. My friends own one of the largest Rolex retail stores in the world, Gunderson's. Great guys. Not that I buy Rolexes, but I love them in the store. And they came to me, they're like, well, how do we take crypto? It's so hard, and wallets, and I don't understand it. And I looked at them and said, it doesn't matter. You take credit cards, don't you? And he said, well, of course we do, right? Almost every merchant takes credit cards. If you think about it, I built some of the first credit card systems in the world, 1996, master merchant, credit card processing, before it existed on the internet. I think I was the first master merchant in the world, and the only reason I think I was first is we started in March, and August of 96, Visa shut us down. And we had to go beg for our life and convince them we weren't an internet company because nobody believed the internet would work. Sound familiar? Bitcoin, blockchain, this will never work. The internet, e-commerce will never work. People won't put their credit card online. Just times change. People eventually get used to things. But the credit card processors are the ones that are set up. So a restaurant doesn't really technically accept a credit card. They sign up with a merchant processor. And when you walk in and you swipe your MasterCard, your Visa, your Amex, the bank has taken the risk in issuing you that card. The bank has scored you to allow you to earn a certain amount of credit on that card. And if you're at your limit, you can't spend more than the bank authorized you for. And when that credit card is swiped, what comes across is an authorization. And 2 or 3 days later, that merchant receives cash in their account minus the credit card fees, what are called interchange. There's 5 or 6 people that pull money out of a credit card fee. So technically, pedantically, bullseye, the restaurant doesn't really accept credit cards. They accept the option to get paid by the credit card company who has assumed that risk. Why is that important? There's a couple different companies out there. I think Crypto.com, I think they're still around. They're friends of mine out of London. There's one called BitPay. They're merchant processors. I told the friends at Gunderson, I said, go call BitPay. I don't know them. I probably should. I talk about them all the time. Sign up with BitPay as a merchant processor. BitPay accepts Bitcoin along with a couple other currencies, cryptos. BitPay takes that money, takes the Bitcoin, converts it into cash, pulls out a small fee, and sends that cash to the merchant. The merchant doesn't really take Bitcoin. The merchant signs up with a merchant processor and gets paid because the processor converts it to cash. Merchants work on cash. They may eventually work on crypto, but the reality is this entire industry could move much quicker if people understood the differentiations. And the differentiation is anybody can sign up with a merchant processor for credit cards. They may get accepted depending on what the processor approves, and they can sign up to take crypto. That processor, BitPay will decide which cryptos, EOS, Ethereum, so whatever comes along, the processor decides what they're willing to take. A merchant could be accepting Bitcoin tomorrow. Put a big sign up. We accept MasterCard, Visa, American Express, and Bitcoin. You don't really accept it. The merchant does and takes that risk. I want the industry to move forward. So I think that's important, but that also leads to something else. There's another big fallacy that talks about, it's called transaction speed. And I hear this one a lot again because I'm in the transaction world. We've built a system called Moneta Pro that actually is an internal ledger. It's technically in the finance world called a closed loop system. It means we've got our own internal credit, which gives us immediate financial settlement. So we end up mixing metaphors. We end up conflating things where you're trying to compare the transaction speed of Bitcoin on the blockchain side, right? Again, Bitcoin is an animal that exists on blockchain. Blockchain is the framework and the technology that enables and empowers Bitcoins to transact. So separate them for a minute. But when you transact on a blockchain and I want to send Bitcoin to another third party, yeah, it takes 15, 20 minutes for it to get there. It's getting quicker. It might get down to who cares? If I was a merchant and I could get money in 20 minutes and pay less of a fee than the credit card industry, which takes a bigger transaction percentage and money's not deposited in my account for 2 days, crypto starts becoming pretty appealing. But again, that transaction volume doesn't matter. It's the transaction and the fluctuation where people get scared. If you've signed up to a merchant processor, you do not have the risk. The processor converts it, sends you money, and the fees are much less. So when people start talking about crypto, quote, currency, I want to distinguish a little difference where some of these things may become payment mechanisms, but the transaction volume is not the same as authorization and approval. And they're different, but it's okay. I can get approved with a credit card in 30 seconds. I'd rather get money deposited in 20 minutes than 2 days. So we think it's going to get there. This stuff is increasing. But what's also going to come along is this new animal called a stable coin, right? Because if you followed me here, one of the problems is this fluctuation. You can't accept crypto as a business. You can't accept Bitcoin for $1,000 and wake up tomorrow and have your account only show 900. Businesses can't work on that instability. The fluctuations are too great. Enter stable coins. All a stable coin really is it's like a glorified electronic gift card. If I bought a $100 gift card from Best Buy, I could email that certificate number to any one of my friends and they get $100 in a certificate that they could walk into Best Buy and spend. Doesn't go up and down, can't really be stolen. I mean, maybe if they stole my card, but it's stable. So banks are starting to create this new term called a stable coin where you want to find a way to send money between two participants. And the banks are in trouble on this one. I just went through, I'll probably post something on it. I had to do a wire transfer to a guy in New York. And it was frustrating. I had to go to Wells Fargo, sign in, sit and wait for a lady, explain to her what I was doing, fill out paperwork, had to try and beat a 2 o'clock deadline so the guy could get it in a day or two. I don't remember how long it's going to take to get there. And we had to pay $30 for the privilege of sending our own money to a guy in New York who had to pay $30 for the privilege of accepting money through his own bank. Think about that process for a minute. Where does that money go? What takes so long? Well, the banks all have to make money, and there's SWIFT and FedWire, and my money's sitting in the account for the bank, and the bank's loaning it out, and it takes, a day for it to get across because they want to hold my money as long as possible because they're making money on it. And then it gets to the other bank, and that bank wants to sit on it for a day so they can make money before they give us, the poor consumers, our own cash. Digital currencies digital payments, stable coins, all the same thing. Basically, if I want to send somebody money in Bitcoin, I say, what's your address? Kind of like an email. It's got a bunch of characters and digits. I don't care. I copy and paste it. Hope I get it right. Send it to them. I can do it from my phone or my computer. 20 minutes later, they have the money in their wallet. Now, can they spend it? Depends on who accepts Bitcoin. Kind of like if I gave you a $1,000 American Express gift card, you'd have to go walking up and down the streets at your local mall. Not everybody takes American Express. Some people do. Bitcoin's a little bit the same. If I send it to your wallet, it sits there. If you need cash, there's great companies. Gemini, Coinbase, there's a bunch of them. They will convert that to cash, and you have cash in your bank account to go do what you want. But that transaction, that speed, that stability, that's what digital payments really are. So what we're going to start seeing is a lot more around stable coins where this is my theory. Again, I love this because we'll be able to look back a month, a year, a decade from now and say I was right or wrong. I don't have a problem with that. I think Wells Fargo, I will go into my account on the computer. I've got money in my account. I will transfer it into the Wells Fargo stablecoin, probably a WFT, Wells Fargo token, or WFX, Wells Fargo X for XRP, which is Ripple. And it'll convert to a digital token, digital certificate, digital account. And I'll send it to my buddy at Chase. And it'll arrive in his as a Chase coin. And it'll convert into cash into his account. And there'll be fees on each side. But that transaction will take 10, 15, 20 minutes and will be considerably less. So JP Morgan, stablecoin, all of these things that are going on. Again, this is where the industry stupidly, in my opinion, conflates things. Jamie Dimon, who actually used to work for years ago when I was at Travelers Group with Sandy Wall and a bunch of these guys. Jamie Dimon famously came out and said, Bitcoin's a scam. Bitcoin will never work. And that was at the same time we think they were shorting Bitcoin and then buying it. But that's a different story on industrial manipulation. We're not sure. Let's stick with what we do know. Fact, Jamie Dimon called Bitcoin a scam. Fact, Jamie Dimon and Chase is creating stablecoin. Nonlinear fact, that doesn't make Jamie a hypocrite. Bitcoin and stablecoin are not the same. The stablecoin for the banks are just going to allow payment to occur more seamlessly between two parties. And the easiest way to think about it, any of you that have two of accounts in the same bank, right? If you're at Wells or Chase or B of A, if you ever moved money from one account to another online through the internet, right? Through your website, through the bank portal, that transfer happens instantaneously. All you're moving is digital currency. You're moving a stable coin. You're moving a unit of value from one account to the other. When it goes from bank to bank, it just has to be done a little bit differently. And that's going to lead us into something a little timely and relevant. Facebook. I have a love-hate relationship with Facebook. I've actually was on some panels with Mark at Stanford years ago. I've tried to take Facebook out a couple times, not in a bad way, just tried to build a better mousetrap. I still think there's a lot of problems with Facebook even as we talk today. I think hopefully some better mousetraps will come along. Any of you that don't realize before Facebook, there was life. It was called MySpace. And before MySpace, there was life. It was Friendster. There were other things before Facebook. There will be things after Facebook. I just hope somebody gets around to doing it quickly. Not the point, though. The point is Libra. Libra is this new cryptocurrency that Facebook is coming out with and has the regulators up in arms. Articles are out today. Congress, stop Facebook. Stop Libra. It's taking over the banking system. It's going to destroy the world. Well, I don't think so. If you actually have a phone, there's a couple different systems out there that are kind of cool. One's called WhatsApp. WhatsApp lets you talk to people online. Primarily was interesting. It really took off in Europe. We don't know why, but it did. You have another one called WeChat. WeChat's primarily in Asia and China. It took off. They perform a lot of the same functions. You can talk to your friends. You can call them for free. You can do video. It's cool. WeChat has a bunch of functions in it that WhatsApp doesn't. Primarily, they have WeChat Pay. Put $100 in. They give you WeChat credits. And on your phone, you can actually buy things. You can send money to people. You can buy mangoes. It's a token. It's a WeChat token. WhatsApp doesn't have that same functionality. Well, interestingly, there's a company out there you guys may have heard of that bought WhatsApp years ago. I think they paid $17.5 billion for WhatsApp. Not sure they've extracted the value out of it yet. They're trying to figure out how. Well, that company that bought WhatsApp is Facebook. Facebook doesn't have a payment mechanism. What's Facebook great at? Copying and stealing. Not like the Chinese copy, right? Again, I have to be careful, but Facebook says, hey, how do we get people to give us more money? They tried Facebook credits. Didn't work very well. I think they were a little bit early. Facebook Libra basically is going to say, give Facebook $100. They'll give you their Libra token. And you can use that token within the Facebook economy to buy things. And it might initially just be games. It might eventually be ads. It might be things in the marketplace. But initially, if Libra acts as a type of stable coin, technically, I think of it more as a credit. You can look at WeChat. WeChat has WeChat Pay, and you give WeChat money. What's fascinating to me is this thing called a float. Don't know if you know what a float is. I learned this early on. We used to take money. When we created the credit card processing company, we collected all the money. And we would actually do credit card processing, build shopping carts. We would process and clear the credit card orders. And once a week, we would send a company a check and mailing labels, and they would mail the product. We were part PayPal before PayPal, part shopping cart before shopping carts. But what did I do on that money for the week? I let it sit in my bank account in what's called a sweep account. I'd earn interest in it, and then at night they'd sweep it over to Europe, and it would earn interest. 24 hours a day, I'm earning interest on other people's money. It's not illegal. That's the way banking works. Facebook, for a moment, has 1 billion, 2 billion people. Again, we're not sure because of deactivated accounts. Again, love-hate relationship with Facebook. Be careful. But if people buy the Libra coin, they're buying that coin with cash. You're buying it like you buy a gift card. You're going to buy into Libra. You're going to give them $100 for their Libra token or their Libra coin or their Libra credit or their Facebook credit. You can call it whatever you want. We just want you to understand, my opinion, the animal of Libra is an internal payment mechanism primarily to compete, at least initially, with WeChat. WeChat is now extended out where WeChat Mobile can be used at merchants. It can be used to pay people because they're willing to accept it and realizing that WeChat, which is owned by Tencent, multi-billion dollar company, will send them that money. Facebook is the same. I don't think Facebook's going to act as a bank. I don't think they're going to take over the world. But I think Libra is interesting, but it's interesting initially in the premise of how does it compete with WeChat? Where does it happen with WePay and things like that? So as we watch the industry move forward, I want more people to accept crypto. I want it to be a bigger premise, but I want consumers to understand it. I want us to have a better understanding of these new technologies because when they come out, they are scary. And they do fluctuate and some work and some don't and some will. But they all get faster. It's like internet modems. Any of you that don't know, internet modems when they first came out would be like sucking water through a straw. You couldn't do Netflix, regardless of how great a PowerPoint looked. You couldn't launch Netflix in 1996 because the infrastructure didn't exist. It was like sucking water through a straw. Well, today, the modems technology is like sucking water through an oil pipe. All that content travels faster. Blockchain's at its infancy. This is going to get faster. It is going to get better. There's going to be winners and losers. But as a whole, this industry is going to grow. That's what we're excited about. So hope you enjoyed it again. Thanks for joining me today on the Bullseye Guy podcast. For more information about the program, this is Stephen Meade. Visit the website at thebullseyeguy.com. Again, Stephen Meade and thebullseyeguy.com.